Hey traders, Marcello here, founder of the Day Trading Academy. Today we're answering your questions about the difference between trading fake money and trading real money. Seb, my man, SE_B. I'm going to call you Seb. You've asked quite a few questions already. I appreciate it. I'm glad you've gotten value into the videos that I've done. I'm going to try to do a lot more of these now, and maybe even for those of you guys that want to listen to a lot of the questions that I answer via podcast, I'm going to try to do that as well for you guys. If you guys have any questions, don't forget to mark them with hashtag AskMarcello. I'll be happy to go ahead and pull all the questions for you on Instagram, Facebook, wherever you guys want to ask them. And also, don't forget to subscribe here to the channel. I'd love to be able to share with you all the experience I have, and hopefully I can help you guys in a way. It's kind of my way of saying thanks, because I wouldn't be here if it wasn't for you guys, and I appreciate it. So, Seb.
Is it important to have paid data? I'm using NinjaTrader with free data from Continuum. And now I will try to trade live after years of studying how to trade. Does it make any difference to use Kinetic rather than Continuum data?
First and foremost, Seb, we're going to be starting a new program where you guys can apply to use our money. So if you want to wait, it should be probably right in a week or two. And if you want to try to apply to get an account with us, you're going to be able to use our account, one of our accounts, for example. One of the things I do have to say is we don't trade people's money. We're not trading advisors, but we're going to allow you guys to apply to be able to trade our money. If you're going to wait for that, it'll just be another week or two, I think. We're getting the kind of all the kinks out of the platform. We're going to have our own platform, which is also free. So keep that in mind. NinjaTrader, you're going to have to pay $1,000 for, Seb, or $60 a month, one of the two. And ours is going to be completely free. And then you're literally going to be able to trade with accounts as minimum as $25,000. So first and foremost, sim versus live. Obviously, losing fake beers versus losing real beers is completely different. Obviously, playing a board game, Monopoly money, you're not really going to have the same effect as trading live. Once you trade live, you can do whatever you want in sim, and it's super, super important. And this is something that I really want to kind of hone in with you guys watching this video, especially you, Seb, since it seems like you've been following quite a while, and also you've asked a ton of questions, and I appreciate it, is that it's super, super important that you guys are very careful with the behaviors and the actions that you guys take in sim, right? If you guys play around or take trades that you shouldn't, or kind of do things that you shouldn't, not according to your plan or the system that you're trading, then what's going to happen is whenever you're under a high degree of pressure, going live for the first time and losing money, then you're going to do what is easiest in your mind, in your subconscious. So it's super, super important to develop the habits when you're on sim, because when you develop those habits, this is something, for example, the process that I go through with a lot of the traders at Day Trading Academy. Once you develop those habits on sim, when you go live for the first time, then you're going to be able to use the correct habits, because your body, your mind is going to switch back to what it feels comfortable doing. And if you have repeatedly for months or years or however time it takes us to be able to do the right thing, then when you're live, you're gonna have a more likely inclination of automatically doing the right thing, okay? So it's super, super, super important for all of you guys that are watching this video. If you guys learn one thing from this video, that's gonna be it. So you guys can just turn it off now if you want. So that's the first thing. Also, when you're in a simulated account, Seb, the fills or the market environment really isn't the same. So what I have seen in a lot of traders, and this process kind of trying to fund traders as well, is that whenever you are trying, the results that you're going to see in a simulated account are going to be better than a live account. Obviously, you don't have the pressure, as I just mentioned to you, about trading live and losing money, but you also are not going to get filled in as many trades as you thought. Because in a simulated environment, they try to simulate the live environment as much as possible, but it's not exact. So there's going to be a lot of trades, and I'm going to tell you guys, this is getting super technical, so ask me a ton of questions, all right? So There's two different types. I'm into it now. I'm into it. So there's two different types of orders. There's a market and a limit order. Whenever you place a market order, what you're telling the broker, if you guys are new, a broker is the financial institution that we used to trade with, right? If I'm going to send you money, you need a bank. If I need to invest in the stock market or trade, I need a bank. It's called a broker. So if we put in a market order and we tell the bank, the broker, hey broker, I want you to fill me at the best price possible for the price of Apple. He's going to say, well, you know, there's a best price at 140. There's a lot of manipulation there with the high frequency trading because they see your order, then they buy it and they resell it to you. They say they're going to get you the best price, but obviously there's a lot of participants in there, and that's something personal of mine. You guys can go read the book about high frequency trading as well. If you guys want to know what that is, let me know. I'll do a video. Then you have limit orders. A limit order is when we tell the broker, hey, I don't want you to fill this order unless you can guarantee me that you can fill me at $1.38 for the stock of Apple. So instead of 140 or 141 or 142, we're going to make sure we get in at 138. That's how we limit risk with the strategy that we use. We call it congressive. So what happens is in a real live environment, you have what's called the price ladder, Seb. So you have the bid-ask spread. If this is the live price, you have all of the orders of where people want to sell, which is the ask, and then you have all the prices of the people that want to bid or want to buy. And there's always going to be the spread, which is the difference between the buyers and the sellers. So if there's more buyers and sellers, then obviously the bid will rise and the price of the stock will rise. And then if we have a situation where we have a lot more sellers than buyers, then the price will drop. It's because there's more. I'm thinking in Spanish, there's more, not demand, oferta is how you say it in Spanish. There's more basically sellers than demand. Supply, there's more supply than demand. So when you're on a simulated environment, Seb, what happens is they simulate the situation as best as possible. And whenever you put in a limit order, let's say for example, the order for the Apple stock is at 140, the price comes up, right? And it touches 140. But it doesn't break through. It doesn't go to 141. Well, since it's a limit order, we're literally getting in line to be able to get filled at that best price. So if there's 10 people ahead of me that want to get filled at 140, I have to get in line and I'm number 10. So when the price reaches there for the first time, it's going to get the first person, the second person, but there may not be a lot of people that want to sell at 140. So it might not fill everybody that's sitting at that order. Does that make sense? So the only way that our orders are guaranteed at 140 is if the price breaks through and it gets to 140 and 1 cent. Because then the supply and demand has overreached the price, and then we're gonna make sure that we get filled at that price. So what happens when you're live? Well, you're in the line. So if there's not enough people selling, then you're not gonna get filled. Whereas in the simulation environment, they try to simulate the situation. It's not exactly like it is live. And there's gonna be a lot more situations in sim that you're gonna have trades that are winners, or gonna have more trades in general than you otherwise would have when you're live. And I'll be honest with you, Seb, you're gonna shit your pants when you go live because you're gonna, first time going live is an experience and a half. And you're gonna literally you're gonna be terrified, right? It's just human nature. We can lose a lot of money. You guys know my story. I took out $25,000 in student loans. I lost it in a month. I did what whatever responsible man would do. I went out and took out more loans. So that's basically the difference. Now, to go a little bit, to go to the next question that you had, that was in regards to, does it make a difference to use kinetic or continuum data? It's basically the type of provider. At the end of the day, no. There's a lot of different data providers. Over the years, the data has kind of been monopolized, so now there's not as many players as before, but at the end of the day, it's all the same thing. So that was a super good question, Seb. I think this was a super technical question. I hope some of you that are new, I didn't lose. Let me know if you guys have any questions. Hashtag Ask Marcello. Thank you so much, guys. Look out for the news on you guys being able to apply for an account with us. So we'll fund you guys, and we'll see you next time.